Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, nationally recognized retirement specialist and six-time author and fiduciary, Tony Walker.
Well, welcome, folks, to the Worry-Free Retirement. And as we record our first show of the new year on January 2nd, 2024, I thought it might be a good time to summarize the top questions we received throughout the year 2023, something we refer to as Tony in the Trenches. And to cover throughout this show in detail, we're going to do that today, but also we have so many questions, I can already tell you, we're going to run out of time today and have to have another show. Now, we've got two audiences at this particular show. We've got our radio program. You'll hear the first segments of the questions today. And then if you want to follow up to the next show, those of you listening on the radio, you're going to have to catch our TV show. And in fact, to tell us how to watch our YouTube channel, in case you missed that, in the studios with us is our own Aaron Orander, America's favorite financial sidekick. Aaron, good morning. How are you doing there, partner?
Good morning, sir. I'm doing just fine.
And we got Derek over at the helm doing graphics. We're laid back today. How do you like this format, Derek?
I like it. Yeah, it's just laid back as always.
All right, Aaron, tell the folks, in case they missed the TV show, how they can watch the episode on the YouTube channel.
Absolutely. I would love to. Folks, all you got to do is go to youtube.com. That's youtube.com. And right there in the top, there's a search bar. Just type in Tony Walker Financial, 3 separate words. Click on that. You're going to see Tony's smiling face, and you're going to find not only past episodes, you're going to find all types of video content.
All right, thank you, Aaron. So here's the format, folks. Again, this is a little more loosey-goosey than normal. We've got all of these questions laid out in no particular order. Aaron Orander is going to read me the Tony in the Trenches, and then I'm either going to use the monitor, Derek's going to be helping with graphics, or I might walk over to the whiteboard, but I think you're going to really enjoy this. This is a whole host of all kinds of different questions and topics. So depending on your age or circumstances, you're going to want to hang in there. So I guarantee you one of these questions is going to be for you. All right, Aaron, lay it on me. What's your first TNT you got for me?
All right, here we go, folks. TNT number 1. It says, Tony, I recently talked to my tax guy about rolling over my 401k to an annuity with his firm. When I asked him if he was a fiduciary, he said, don't worry about it. Well, I am worried about it, and I'm wondering why he is not a fiduciary like you.
Well, this is a really good question, and as fiduciaries at Tony Walker Financial, a lot of times people will come to us and they ask us this question, Tony, I know you're a fiduciary, I don't even really understand what that means, and other people that I ask sometimes say they are fiduciaries or they tend to change the subject. And this is getting a lot of press, folks. More and more government officials and authorities are pretty much saying that everybody that gives investment advice should be a fiduciary. So let's think about this a minute. What is really investment advice? Now, this is how I understand investment advice as explained to me by the regulators. If someone is telling you to roll money out of a 401k, for instance, well, those are investments, and put it with them in an annuity or whatever, they are giving investment advice and as thus should be registered. If they're not registered, they're not fiduciary. So let's look at the definition of what a fiduciary is and why people probably don't want to be registered. First of all, fiduciary is simply this: an advisor who is required by law to work in your best interest. Okay, so the question is, why do certain advisors decide not to become fiduciaries when it's in the best interest of everyone for them to become fiduciaries? There's basically 3 reasons. Number 1, it is very complicated to be registered under these laws. I mean, I have Trey Jurgens in our office as a chief compliance officer. We have to pay thousands and thousands of dollars to consultants to make sure we're falling within the confines of the law. So it is very complicated to monitor and follow the regulations as set forth. With us, we're governed and overseen by the SEC, or Securities and Exchange Commission. Leads to our next point. It is expensive. So if an advisor is not willing to get off their wallet and do what's in the best interest of their clients, they're not going to want to be registered because it is very, very expensive. I'm talking close to 6 figures that we spend just on compliance issues around these regulations. And then finally, let's face it, if somebody maybe is not really acting in the client's best interest, why would you invite regulators into your office and become a fiduciary in the first place? And instead, maybe just try to fly under the radar and avoid the issue altogether. So in summary, folks, if you're not working with a fiduciary, why not get a second opinion from someone at Tony Walker Financial like us who is? All right, Aaron, what's our next one, partner?
Okay, Tony, here's the next one. Tony, I have well over $1 million at my bank and worried that FDIC only covers up to $250,000 of it. What are some other options to diversify my money while keeping it safe?
Well, we'll get to this article in just a second. Obviously, one of the things we at Tony Walker Financials, we represent a whole host of insurance companies offering different annuities. So we can spread out and diversify those assets, especially when you get into over $1 million cases, and put them with different insurance companies. Currently, under the state of Kentucky, each person, or Indiana is the same thing, it's called the State Guarantee Fund, has up to $250,000 of coverage per person. We can talk to you in more detail if we meet on that. But here's another side note. We don't really recommend these all the time, but this is just the types of things that are out there. This is a trust arrangement where, let's say somebody is happy with their bank and they've got well over $1 million at the bank, and they're realizing, hey, wait a minute, I only have $250,000 of coverage under the FDIC program for banks. Well, it says here that you can actually list up to 5 beneficiaries, assuming you put the bank CDs in an irrevocable, this is a revocable trust. It can be changed, but you have to have 5 beneficiaries because they can get up to $250,000 of those coverages up to $1.25 million. So just an aside note, and different things that we try to look out for our clients who are savers, and most of these savers are more importantly wanting to protect their money versus grow it. So that's you right now. You might be sitting there saying, yeah, Tony, I've got a lot of money at risk, or I've got too much money in the bank, and I need to spread out and diversify, and I want to protect this money. I would highly encourage you to contact us. We can sit down, we go over a game plan, we can make these recommendations. And yes, at Tony Walker Financial, we are more concerned about protecting your money versus trying to grow it at all costs and taking a bunch of risk. All right, hope that helps. Aaron, what do you got next?
All right, next up, Tony. I've worked my entire life for a paycheck, and now that I'm thinking of retiring, I'm getting very nervous that the money I've saved for retirement won't be enough to replace the paycheck I'm used to bringing home each week. The company that handles my 401k says for a fee, they can handle this for me, but I don't want to deal with a huge company and rely on a 1-800 number. Tell me why I should move my 401k over to you guys versus leaving it at my 401k.
Now, this is an interesting question because of all the services we offer at Tony Walker Financial, probably our main focus is what's called 401k rollovers. I bet 60% of our business comes from people who have a 401k and they're thinking of moving that over to our services, and we'll talk about the split IRA later, but into something called our split IRA. But some people do say this. They'll say, well, Tony, I don't know, you all charge a little bit of a fee that's a little higher than my employer, and they seem like nice people. They've always handled my 401k. I mean, really, why should I move that 401k over to you all? Well, besides our tax planning department, besides getting to meet with the owner of the company, not only do you get myself and all of our expertise, but you also get, roll it, Derek, this wonderful staff. Folks, this staff is dedicated to our clients, and this staff is located, all of them, in the state of Kentucky. So if you're in Kentucky or Southern Indiana, my question is, would you rather deal with a personalized staff that knows you, can answer your questions immediately, or do you want to call some 1-800 number and try to get answers to your life's questions? This makes no sense, folks. So if it's you right now, if you're looking for a well-trained staff, salaried fiduciaries, the owner of the company, that's me, Tony Walker, who will talk to you in person and help you with that 401k, not just now, anybody can do that, but long into retirement, then we need to talk. In fact, we put in the lower third here the number of our phone number. You can call us, or of course, you can always go to TonyWalkerFinancial.com. You're going to click on that Let's Get Started. Let's see if we can help you. And of course, if you've got a 401k that needs to be rolled over, we need to talk. Did you realize that if you have more than $250,000 in retirement assets, the government could tax as much as 40% of it when you go to take it out? And with current tax rates set to expire in 2025, the taxes you will owe on your 401k could climb even higher. Don't wait until 2025 to see how much Uncle Sam will take of your money. Get a game plan by logging on to TonyWalkerFinancial.com. That's TonyWalkerFinancial.com. Wondering how much money you'll need to retire? Probably a lot less than you think. I'm retirement specialist Tony Walker, and for the past 36 years, I've helped thousands of savers determine when to retire and how much money they'll need in retirement, and I can help you too. To meet in person at no cost or obligation, let me invite you to log on right now to TonyWalkerFinancial.com or call the toll-free number on your screen. We look forward to talking with you soon.
Okay, Tony, before we get to the next question, I got to be honest. We haven't used this desk in a while, and I was kind of back here, and, we've got some of Tony's latest books here. We got Live Well, Die Broke. We've got Expect the Best. But something I came across that I have not seen in a while. I was like, what is this? Folks, if you don't remember, this is the Life is Too Short to Eat Cheap Bacon. What do we call this thing?
Well, that's funny. So that came about when a lot of times my mother still lives in Lexington. A lot of times I'll spend the night there. I'm on appointments. So every morning I get up and she fixed breakfast for me. I know this is pretty cool, folks. I don't have the cowboy sheets on the bed anymore. We did get rid of those. But anyway, so we have the bacon, and Mom every time says, Tony, how's that bacon? I said, Mom, it's really good bacon. And she tells me how much it costs. Folks, she does not cut back on the bacon. So when I wrote this chapter in Live Well, Die Broke, I titled it, Life is Too Short to Eat Cheap Bacon, meaning many of you, and we'll talk about this later, many of you are waiting way too long to spend money. And I always encourage people, even if it's small things like spending extra money on a pound of bacon, take time to enjoy your money. There's things you can do to spend and enjoy your money. But I found, Aaron and Derek, I know you hear me say this a lot, but people wait too long to spend their money. So hopefully that helps you out on the bacon story there, Aaron. All right, we better get back to the next question here. That's a good one.
All right, next question. Tony, I know you keep talking about tax rates expiring at the end of 2025, but is there really anything I can do now to save on taxes?
Well, it's funny you mentioned that. Let's kind of take a look at these taxes because this is really interesting, folks. Again, we're recording this show in January of 2024. The current tax rates, and I'm going to read these off, especially for those of you listening on the radio program. In 2024, basically you can make up to $23,000, okay? That's the maximum in the 10% bracket. It doesn't jump into the 12% bracket until $23,200. Your maximum limitation on 12% is $94,300. This does not include adding the standard deduction on top of this. I know this gets confusing, but take my word for it. It just means we're in some of the lowest tax brackets ever, especially if you're making under around $100,000 per year. The next bracket goes to 22% and 24%. And notice these maximums. So the maximum you can make in the 22% bracket is $201,000. The maximum on 24% is $383,000. What this means is, again, in 2024, if you have a 401k, IRA, TSP, this might be a good year to take a lot of money out of these amounts of money that are pre-taxed, tax-infested accounts, pay the tax now, either through Roth conversions or just simply banking the money or spending it, because here's what's going to happen in 2025 when these laws expire. They could go back to the 2017 rates. And you might say, well, what's the big deal about that? 2017, shouldn't it be cheaper? No, in 2017, you'll see that the 10% bracket actually stopped at $19,000. The 15% bracket, remember the current law, it's 12%. Well, if it goes back to 2017, it jumps from 10 to 15, not 10 to 12, and the bracket stopped at 77. Next jump is not to 22%. If they go back to the 2017 rules, it's 25. And again, the brackets drop down even further, meaning your money more quickly goes into the next bracket at 28%. So basically, with this debt spiraling out of control, what is it, over 33 trillion or something crazy, they're going to have to come after these pre-tax accounts. You can write it down. That's one of the main sources of income for politicians to try to pay down this debt. And I'm just telling you, the chances of this going back to 2017 rates are high. So what do? Well, you got to get a plan now. You can't wait till 2025 to see what these rates are going to do. At Tony Walker Financial, we have 2 folks on staff that are tax certified. Now, what is their role? Well, we don't do your taxes. We're not trying to be your tax preparer. What these folks do is included in our game plan is a way to monitor your progress and see if we can minimize those taxes on that tax-infested IRA or 401k plan. So if that's you right now, especially if you have at least $250,000 or more, that's who this is really going to impact. You need to contact us by logging on to TonyWalkerFinancial.com. Click on that Let's Get Started or give us a call, 877-499-9255. Good stuff, Aaron. I know we got some more loaded up over there. What's next?
Tony, I've heard you say on your commercials that many savers will need less money in retirement than they think. What do you mean by that?
So one of the big things that people, when they retire, sometimes we like to talk in terms of paychecks. So people will come into me and they'll say, Tony, I've worked 30 or 40 years. I've received a paycheck all of my life. And now what am I going to do to replace this paycheck? So we're not really sending you paychecks in retirement, but it is a good way to think about things, because what people forget about is that paycheck that you've received all those years when you were employed or are employed currently, much of that money never goes into your back pocket. Let's take a look at the typical paycheck. I mean, if you think about this, let's kind of highlight some things, Derek. Let's focus here and stay on this just for a second. Your gross amount, I can't remember if this was monthly or biweekly, it doesn't matter. Let's say your gross amount, that's what you're actually paid. So let's say your salary was $38.07 a month. That's what your employer's paying you. That's gross. And you say, well, what does that mean, Tony? That just means that's your salary. What we have to do is we have to look at all the deductions that are taken out of that paycheck. There's a myriad of things you might be having here that are taken out while you're in your working years. And then that leaves you with a net amount of only $1,800. So you'll see this in a minute. Let me kind of go through this, Derek, before you go to the next slide. So people are under the impression that they're actually making $3,800 a month and that's what they're living on. That is not what you're living on, folks. What you're living on is $1,806 a month. So what we're getting ready to see here in a minute, when you get into retirement, if you think about this, you're no longer under your traditional paycheck. Many of these deductions will go away. Your FICA will go away. Certain local taxes will go away. Let's say you're contributing to a 401k. You're not going to be contributing to a 401k anymore. So all of these deductions, many of those will go away the minute you retire, which is why I created this game plan, this proprietary software that only Tony Walker Financial has available to you. Now, who gets to go through the software at no additional charge to them? It's people that have at least $250,000 in assets. We're going to run through this income software. This is very involved. Usually takes anywhere from 4 to 7 hours to put all this together. But if that's you, if you're a saver and you're saying, Tony, I need a plan. I've got money I've saved. I want to reduce these taxes. I want to understand this paycheck concept. What's the difference between gross and net? This is what we're going to show you. So as we kind of come over here, Aaron might have to tighten this up on the screen a little bit. If you'll notice here, at age 65, this person, Bob, was making $85,000 a year, and all of a sudden there's nothing there. Well, that's because Bob stopped working. His paycheck is no longer there. In this case, Bob did have a pension. These are all annualized, by the way. He doesn't need his Social Security yet. We didn't start that until he turned 66 for whatever reason. That's another thing too, folks. People say, when should I start Social Security? It just depends on your situation. But that's really not the point of our discussion now. If you'll come down here all the way down to total annual income, notice when Bob was working, he had $85,000 of gross annual income, $10,000 a year gross from some real estate he owned. So that led to $95,000. And then all of a sudden he's with Tony Walker Financial. He's ready to be worry-free in retirement, excited to start. And all of a sudden we start sending him $63,000 a year gross. You might look at it and go, well, what happened, Tony? Well, we pulled his pension, in this case, rental income. We had a Schwab account we set up for him. And in that year, that's all he needed. So again, folks, you don't want to take out any more if you don't need. Now, in this case, what happened was we started bumping this up. Why did we take him from 63 to 85? Because Bob, in this case, has more money than he knows what to do with, which is a good thing. You see, at Tony Walker Financial, we're different than a lot of money managers and advisors who tell you to just keep holding on, holding on. In fact, go to the 3 halves of life. This is interesting. See, a money manager would have looked at Bob's situation and go, Bob, you better hold on to that money, man. Don't spend it. Just keep taking $64,000 or whatever it is just to get by. And we would say, that's nonsense. The reason we ran that particular, and put this up full screen again, Aaron, the reason we've got him making more and more money sooner and pulling it out of the plan is so that he can enjoy it now because of this graphic. You see, Bob is what we call in halftime. That's generally between the ages of around 60 and 70. This is the point in time when most people can enjoy their money. As you go through the second half of life, as you get older, you're going to need less and less money. I just had a couple in today who's a client. They said, Tony, you're right. We're in our mid-70s. We can't even spend this money. So if you're sitting there looking at this graphic and you realize, yeah, that makes sense. Why is my advisor not encouraging me to spend it? It's because they have a conflict of interest. They don't want you to spend it because that's taking money out of their pockets. It doesn't have to be that way, folks. In fact, what I would recommend you do is right now log on to TonyWalkerFinancial.com. Let's just have a conversation about your situation, or just give us a call anytime at 877-499-9255. Our employee spotlight today shines brightly on Mr. Craig Davis. Craig, thank you for joining us.
Thanks so much for having me.
You're welcome. And when did you start with Tony Walker Financial?
I started in August of 2023.
And prior to coming here, so a little bit about your history, which is an interesting work history.
Yeah, but prior to that, I was in the mortgage industry for a few years. And before that, I spent about 15 years on the mission field in Southeast Asia.
That's amazing. So explain your duties now at Tony Walker Financial.
Now I'm the rollover specialist, so when people need to move funds in from their 401k or from another retirement plan, an IRA, moving them in, I help with those. Also facilitate opening new accounts with Charles Schwab and some service issues that relate to that as well.
And you're really picking up this industry quick. We appreciate all you're doing.
Well, I love the opportunity to serve people and make complicated things a little bit easier for people so they don't have to worry. They can get on with their lives.
Is there anything about your job, I know you're relatively new here, but that you really enjoy about working at Tony Walker Financial?
What I really have enjoyed is that opportunity when this new account opening process can seem so complicated, or if someone's in a big transition from their work life to their retirement life, it just seems like a lot. And so the ability to step in, and because we do these things every day, they're not quite as daunting for us. So we can move through those steps pretty quickly and help people get settled.
And we're already having a lot of wonderful feedback from clients who have rolled over the 401ks with you on the line. So just thanks for all your hard work and the great job you're doing.
Well, I love the opportunity to serve and appreciate the opportunity to be here today.
You're welcome. Have you recently retired, been laid off, or offered a pension buyout? Has the company you work for moved, been acquired, or closed its doors forever? And finally, do you have a 401k with a previous employer you'd like to move to safer territory? Then take advantage of this opportunity to move your 401k or lump sum pension to Tony Walker Financial. Let's meet in person to discuss your retirement options. Log on now to TonyWalkerFinancial.com to schedule your free, no obligation appointment. Let us help you today.
Okay, Tony, I've got a TNT here, actually, that's a Bible TNT. Here we go. Tony, of all the scriptures you have covered about money, what scripture in the Bible do you feel best summarizes God's grace and our standing with God as it relates to our relationship with Him and that constant state of feeling like we don't measure up to what God expects of us?
Now, this is going to surprise you. There's 3 verses here in this passage is actually found in 2 Corinthians chapter 5, verses 17 through 19. Now, bear with me on this, and this is going to have something to do with banking. All right, let's read it. Basically, it says, therefore, if anyone is in Christ, he is a new creation. The old has passed away. Behold, the new has come. All this is from God, who through Christ reconciled us to Himself and gave us the ministry of reconciliation. That is, in Christ, God was reconciling the world to Himself, not counting their trespasses against them, and entrusting to us the message of reconciliation. Now, if you look at these verses, you might say, Tony, I don't know what this has to do with anything. It sure doesn't do anything with banking, does it? Well, look at this key word I want to focus on. It's called the word reconciled. Now, you might say, well, I don't understand. What does reconciled mean, and why is God mentioning this in His Word? Well, we got to think of banking. So picture you are looking right now at your checkbook. and it says that you have $10,000 in it, okay? That's your balance. When all of a sudden you receive your bank statement, those monthly statements that they send you from the bank, and the bank statement for that checking account says you only have $5,000. What is your first reaction? Well, probably it's either shock, surprise, anger, disbelief, but it doesn't matter. The key is this. This is very unsettling and unnerving to discover that there's a major error and something that you're going to be preoccupied with until you figure out who created the error and how in the world you're going to correct it. So now you must reconcile the checkbook to confirm the correct amount. Well, it turns out in this example, the bank was correct and you weren't. In other words, you only have $5,000 in there, not 10. So not only do you not have the funds, you probably are going to be charged a fee by the bank for insufficient funds to cover the check. Plus, let's say you just wrote a check for $7,000 to a vendor, you just realized you just wrote a cold check. So you, as the one whose account the balance is in, now you've only got two choices. Let's take a look at this. You can, one, just kind of forget it and act like it never happened. That's not going to work out. Or you can get it corrected. But there's a problem as this relates to our standing with God and our sins, and it's called our works. You see, folks, unlike a checking account that gets unreconciled, our life with God and the sin that we have to deal with is unreconciled. We cannot do this on our own. We need help, and this is where God's grace comes in. That's why Paul calls it the ministry of reconciliation. He's done it all. He's corrected the errors of our way, and now we are even, if you will, even Steven with God. Now, next week on the show, I'm going to give you an example of this. It's really interesting. It's going to involve estate planning I used to do with business owners, and this idea of reconciliation, but something also called an imputed income and what that has to do with the Bible and our standing with God. So I hope that helps. Well, due to the essence of time, I think that's a good place to stop. So in our remaining few seconds here, let me encourage you to do this. If you're sitting there right now and you're not really reconciled with where you are with your finances, maybe you feel like things are out of balance, you don't have a trusted advisor, you're heading into this thing called retirement and you're not really sure what you're doing. Maybe you're afraid of running out of money, or maybe you're just afraid of too much risk and worried in 2024 the stock market's going to tank. Whatever the situation is, we can help at Tony Walker Financial. Here's what I would do. Take advantage of something we call the free 10-minute fiduciary phone call. All you got to do is log on to TonyWalkerFinancial.com. You're going to click on that Let's Get Started button. Now, after you do that, that's going to go to our office, and we're going to set up this free phone call with myself to see how we can help. And if it looks like we can be of help, we're going to meet with you in person at either our Bowling Green, Louisville, or Lexington, Kentucky offices. So do it now. Log on to TonyWalkerFinancial.com or simply call the toll-free number on your screen. All right, that's all the time we have. Remember, part 2 of the Tony in Trenches is coming up. Aaron, you going to be ready? You got some more questions?
This has been a lot of fun. I say we do this next week, too.
All right, we got it covered. Derek, good job over there. You didn't fall asleep today. Good job, man.
Yeah, looking forward to it, boss.
All right. Folks, you have a good day. And you remember, between now and next week, if all else fails, you make it a good one.